Hey, Johhnie, we are back for another fun adventure, talking about sharpening the tax axe as it relates to retirement planning. How's the day treating you?
It is good. We're getting closer and closer to Tiger baseball. I'm going to talk about that
I
for the
know,
next
more and
6 months. So we'll lead off every
more.
podcast just with that. By the way, do you know who the Tigers signed again this year, Mike?
Sparky Anderson. Oh no,
Justin,
that was a
Justin,
few years ago.
Justin Verlander, man. He's coming back at 44 years old.
That's
Isn't that crazy?
amazing. That is crazy. 44
Started
years
his
old
career.
playing baseball. There aren't many major league sports you can do that with.
No, so we're it's just kind of novelty, but he might have a good year. So we're excited
He
about that.
he might. And talking about having a good year, let's talk about taxes and how Shelly can help people have a good year.
The transition master. Yes. Very good. Very good,
Yeah.
Shelly. Good to see you. And
Yes, good to see you.
once again, Shelly owns Sharper Edge Tax Solutions. Her last name is Cioppa. Did you do that on purpose?
No.
Because
Sharper edge and choppa. That's really funny.
yeah, that's pretty cool.
I didn't even
But
think about it until the first episode that we did.
I think I,
Right.
I think I think we've developed a new logo for you. You
Yeah.
get like an axe or
Yeah.
something. No, that could be a new logo for your company. But Shelly has been a blessing to partner with us at New Heights to help anybody, but obviously clients we're referring to and kind of work together through this retirement planning and tax planning because it all coincides so much. And I always say your tax planning has to be the first step in your retirement planning because that's a big deal. You can kind of give yourself a raise. And
hmm
so she loves doing this. Obviously, she's been doing it 30 years. But Shelly, you've got a lot of people, they have money in maybe an old 401 they've rolled over, they have a Roth, they have after tax money, maybe in stocks or whatever. Uh,
hmm
when do people need income. They're going to use that money. We're not contributing to savings anymore when we retire. Where am I going to get money from to live off of? Is it just I'll pull some over here now, I'll pull some from here now, or what's your opinion on that? Because I know you have kind of a strong view and what the best way to go is
Oh,
on.
yeah. Well, when you're in your early retirement before age 70 and a half, you know, I would start with the taxable accounts first because the big beautiful bill tax benefits are mainly focused at that age group. Um, 60, 50, 55 to 65 to 70 is kind of where they're geared at. So we want to take advantage of those tax deductions and tap into our taxable accounts first. And then we're going to go after our tax deferred accounts and then into our tax free, like Roth IRAs. And it's really a good time right now to take money out of a taxable account and roll it over into a Roth conversion.
So what you're talking about is I have a 401k. Maybe I've rolled it into could be an annuity, could be an account at a brokerage or whatever. I've rolled it out of my 401k. All that money's taxable, correct?
Correct.
So in your opinion, and I kind of agree with it absolutely, is that's where we want to go first.
hmm Yeah, when
Okay.
you get up in your 70s, you don't want to pay taxes on your income at the rate that you would have when you were still working.
Because
So,
RMDs, which are required minimum distributions, which come out of that particular bucket of money, right? That's where the
right.
RMDs come from.
Yes.
Those
Yep.
start at what age right now?
70 and a half.
Okay. And you're forced to take it out. So you got to
Yes.
take the money out. Um,
You know what my favorite piece of advice is for my tax clients who have to take RMDs? The
what's that?
majority of my tax clients do donate money to charities, to churches. So I tell them when they have to take their RMDs, instead of taking it out and putting it in their bank account, direct it directly to their charities and keep their money in the bank. And that way they don't have to pay the taxes on they're not that way they're not adding to their taxable income by taking the
Well,
RMDs.
that's a great tip. Let me understand that because we go to church and we give offerings and we pay a thing called tithes, which if you go to church, you might understand what that is. So every
Hmm.
week you take our philosophy is, you take 10% of your income and you give it to the church to help the ministries and so forth. So over
Right,
the course of a year, especially if you're retired, what your income is going to be. So say it's
right.
$40,000. A great approach to this would be, instead of doing that on a weekly basis, you know that you're going to get $4,000 over the course of a year. When you get that RMD, you could just do it once, and
Right.
that gives you a tax benefit.
Yes. You get the deduction for it, first of all, for donating. And then you also get to satisfy your RMDs without adding to your taxable income.
Wow. I didn't
And
know that's a great idea.
okay. And Shelly, you have to forgive me. You have to talk to me like I'm a fourth grader, okay? And the reason it doesn't affect your income is because you're not taking it out of your bank. It's going from your bank to the church's bank in this example. It's being
Correct.
transferred, but it's not coming to you to do the transfer. Whereas Johhnie, he gets his paycheck and then he takes a percentage of that and gives it to the church. So it's coming to him as income. What you're talking about is a strategy, a sharpening your tax act strategy to move the money from your bank account to the church's bank account. You still benefit in multiple
Hmm.
ways, and it reduces your income. Did I get that?
That's correct.
Wow, that's
That's a
crazy.
great. So once again, if I'm 74, and I know last year I gave $12,000 to the church, and I did that the year before and the year before. I get my RMD, it's $10,000. I could just do the lump sum, go ahead and give that to the church, and then just the other
Add
2,000
2,000
as
out
a
of your
quantum.
pocket.
And that 10,000 now is deductible, so I'm not paying
Yeah.
taxes on that.
That's awesome. That
That
is.
that's any charity, is that right?
Oh yeah,
In
Any
any charity,
nonprofit? Yeah. I mean, I
any
use the
nonprofit.
money because we go to church and all,
yeah.
and I know people usually, if you go to church, there's some kind of somewhat consistency to what you've given over the years, generally. So, but any nonprofit. So that is
Hmm.
such an awesome principle to follow. Yeah. So, wow, that's
Who
really
would have
cool.
thought? Who would have thought that you could actually do what you want to do all the time and benefit from it in multiple ways? Because that's another strategy to help you retire at new heights. Because you're saving some money, you're getting benefits, you're still blessing the ministries or nonprofits that you're part of. You're just leveraging the tax laws that Shelly knows inside and out. And you're sharpening your tax axe so you can keep more money in your pocket and retire at new heights. I love this. This is great. This is why we're
Hmm.
doing this mini series.
And another thing that's cool is if it actually, Shelley, could give you the opportunity to give more to your charity because
Yes.
technically you're going to keep more of your money, right? Because
Right.
you're not paying taxes on it. So if you're out there and you're like, man, I'd love to be able to give more to my church or my charity, by utilizing this principle, you're keeping more of your money, which allows you to give more than just that $10,000 if you want it. I'm using that example. But that's
Right.
another awesome thing to look at this too, is you're able to do more because you're kind of giving yourself a raise. Is that
So, all
right?
right. Yeah, all right. So let me summarize because he just hit something. So let's say, and I'm not a tax accountant, so I don't even know the right things.
Fourth grader. We're going
Let's
back to fourth
let's
grade.
say that your tax bracket's 22%. Every dollar you could take in as income, you're taxed at 22%. Okay. This is Michael math.
Hmm.
The strategy you're talking about is going from your bank account to the church's bank account. Just saved me 22% on those dollars because they're not coming into my pocket. And that's how you can give more money because the money's not coming to you. You're able to give maybe not 10,000 this year. Maybe you can give the whole 12,000. Is that kind of what you're talking about because the money's not coming to you?
Yes.
Okay. That's fascinating. That is a sharp tax axe right there. We talked about one last time, the 5-year rule. Now we've got one how you can give generously to nonprofits of your choice and do it without having that income come to you so you can give more generously, retire at new heights, and leverage the money that you have. So Johhnie, I think that's enough for this episode because if I can get one solid nugget, I want our listeners to land on that one nugget and reach out to Johhnie, seriously, or just, if you have a financial advisor other than Johhnie, shame on you, but no, seriously. You can reach out to Shelly directly. She can help you, but Johhnie and Shelly work together. So reach out to Johhnie. You can get a copy of his best-selling book at retireatnewheights.com. And you're going to find a lot of great information in that book. But even better, you're going to have a relationship with Johhnie and access to his team like Shelly Cioppa, who's going to help you sharpen your tax axe to keep more money flowing into your pocket so you can retire at new heights. I cannot wait for the next episode, you two. This is like too much fun. I've never had this much fun talking about taxes.
It's
So
ridiculous. But if you need to get a hold of Shelly, you could just go to retirednewheights.com and th- there's contact information. We'll make sure we get you in touch with her to
awesome.
make an appointment, get a phone call in to talk with her. But anyway, I just want to make sure people understand how to get a hold of us to get a hold of her for sure.
That's great. All right. We will be back next week for another fun filled episode talking about taxes. Talk to you later.
See ya.
Yeah.